Good morning. So another gap up, and where's my cursor? There we go. There we go. Decent sized gap ups. Yesterday was a gap up, another gap up. Tomorrow would be the icing on the cake, gapping up, maybe up to here. We'll see how far today gets. But the good thing about today's gap, and so as we look at each day, and then, of course, coming into the next day, one of the things that we look at is how the prior day formed. Happen to notice on the chart, we broke last September low. Last September low. You're confusing me. This last September low. That doesn't make any difference, McGraw. That's so far beyond what's directly to the left. It's irrelevant. Trivia. Yeah. Let's play some other games. Don't confuse me early in the morning. I haven't even had coffee yet. Okay. So what I was going to say was, when we look at gaps, one of the things that we want to look for is how did prices form the prior day, right? So back here, when it gapped, it was going down. So it's starting from a point of a pullback. And so that's a good thing. I mean, it gapped up into resistance and it dealt with it really well. So now yesterday, right, was similar, that it gapped up and it pulled back to some support level, and it cleared a level of resistance. So that opened up the door to pulling back into the void somewhere in here. And it did the most bullish thing it could do, was that buyers stepped up right on top of that area right there where it pulled back from. So when we look for gaps, whether they're gaps up or a gap down, we look at those areas that were most recently overcome as being a point of where buyers are going to step up. Now, it doesn't mean they're going to hold it there, because sometimes as things gap, I'm just looking for something else. Well, here you can see it here. And it pulled back into there and it stepped up. So this may not be the greatest example, but sometimes that fails and it goes down to the next one, and you look to the next pivot over there to the left to see if it holds there. So that's part of the process. And there's also the part of the process of creating support, which starts with a pivot, and then it could do this and then goes back up. Now, of course, one of the things it could do, and this isn't a great example, but it's one that's in front of my face right now, is it could be advancing during the prior day, and then it gaps up, and it's kind of an extension of the rally that happened the prior day. And that's higher risk as far as a pullback. I'm not suggesting that this pattern results in this pattern. It's just the idea and concept of, if it was doing, say, the one day, and then it gaps up, well, it's got an open gap and it's got this run up, this momentum move that creates the potential for a pullback where there's, little to nothing to stop it. Now, today's gap up, you can see it's at right around over here, and it's gapping up from a consolidation. So that's a good thing, because it's not, yesterday, as you know, was pretty much of a go nowhere day. It just chopped around and chopped around. So it built an area of support, which obviously shouldn't be violated today. If prices were to close below there, that would be short-term bearish. We don't know if that'll happen. Right now, it's gapping up here, and the ideal scenario, because it consolidated all day, is it does not pull back into here. If it does, look for a turn to be a buyer that goes up. But because this was a consolidation and it's a relatively, I guess, a decent sized gap, I have to look at my other platform to see spiders, how much they gapping up here. That doesn't. I don't know if that number's right. 1/4%. That don't look right. Maybe it is. Anyway, you're scapping up here. So it rested yesterday. Now you can see it's coming up here. So now, what if the gap doesn't get filled today at all and it holds up? More bullish price action, and then it gaps up tomorrow, Friday, into this area? Odds are it's going to get sold. So that's what the kind of thinking you want to take into today, is that while prices are up a bunch, they did rest here. And we talked about this being bullish price action. It got rejected. It looked like it was going to go down. Inflation news, there's no inflation. Don't worry about it. Sleepy Joe's got everything under control. And, everything's very good. And so gap, and then we're going to come up into this larger area here, and a big whole number of 430. The 200-day moving average is lurking right up above. Maybe it'll tag it, and the media will see that as being a wonderful thing. So far, so good as far as the upside momentum. 4,300 possible sell zone as we deal. Yes, of course. And always the whole numbers are sticking points in larger areas of open interest. So I don't have anything on the put side, which you might think SPX put side would be the no-brainer, but they ain't going to be where the money is anyway. So I've got 42.90 as the level today. And it was at 80 by 95 before, which is pretty good. But it dropped off quite a bit at 4,300. Yeah. Well, now it's backed off, I guess, a little teeny bit at 60 by 70, which still ain't bad. But, if things pop up there at the open. Well, it's always the thinking, George. I mean, even without looking at the option table of open interest in SPX, there's always going to be larger open interest at that whole number. It's just the way it is. Yeah. And then you can look at the spiders and see if it correlates to that. Sometimes it does, sometimes it doesn't. And then, just looking at, out the next month, yeah, it's big open interest all out a month, further out a month. So there's always going to be those higher sticking points. 41.65 to start. 41.65. 41.65. Well, it's close. It's gapping up, so not a bad idea, McGraw. I'm not totally saying no. You've got this support area right there, right? That pullback area at the end of the day. Yeah. So you're thinking 4,200 will be a support point on the way down? Maybe, sure. But remember, it's going to be opening up here, and for it to come down here, you can see the congestion there. It really, as I was, pointing out before, it really shouldn't come down below 42.90, 42.09, let's say, because it has to travel pretty far. Now, what you're saying, going down to 41.65, I like that idea. I'm with you, because it's got to travel a long way. It's got to hit this gap fill, and then it's got to hit 4,200. Then it's got to hit this pivot right there at 41. It's not a pivot, but 41.93, which will be a pivot on like the 15-minute chart. So, so you got enough protection. You got enough things to focus on that'll tell you, I made a mistake. I better get the hell out of the way. So, yeah, I mean, anywhere in there, that'll be fine. It'll be fine. And We'll see. Let's see what the spiders are doing here. They're kind of just drifting down, which suggests to me buyers will step up again. All right, so let's see futures. They look good. They're not. It's not a big bar yet. Now, yesterday was a big bar. So I mean, that's probably what happened there. Since it just exploded on the news there pre-market, and then it was just a grinder, and then it just the trading day was just watching the grass grow kind of thing. Some things that moved and stopped and stopped and started. Little run up right into the near the open there. Q's right up into the top of the range there. Right there at that topping tail. Everybody knows it ain't gonna go up forever. YM, I said yesterday, had the best looking chart because it had the room to go up. And I think until proven otherwise, we'll assume it will go up and maybe tag that 200 MA. Just to look at the industrial cash, just to know that level up here. You should set an alert there. Just to know it's there, not that you're going to watch it. Yeah, Disney's helping. People can't afford or find milk for the baby, but they're going to Disney World. Some guy on Fox, they're talking about the job growth, whatever, and he said, yeah, people can't afford to pay their bills. They're getting second jobs. It's like, duh, that makes sense. Let them drink soda. How about water? Freaking water's expensive. You have to open up the tap with a filter. They had the guy from Porn Stars on the other day. He says business is booming. People can't pay their bills. They're bringing in their stuff to sell it to get money to pay their bills. Yeah. Porn. McCowan, you got a dirty mind. Porn Stars, the guy with the bald head and the chubby son, and the other guy, the comedian. You go to see those porn stars, you're going to walk out with no money. And then you're going to have to explain to the wife where the money went. All right. VIX down below 20. I mentioned a couple times down below 20 is where it's been reversing up from. But hey, maybe it can get down to 17. That was just a level to keep an eye on. All right. So it's down below here. It's the thing we're looking at. Be careful. The put call kind of just tag the band. That's not really good enough even for government work. We want to see it push in there. So let me see this chart. And what you want to do is, this moves up today. Your put call ratio thing, set an alert at like 0.65 maybe. During prior markets where the market's topped out, or even in bull markets where it's intraday and a lot of call buying, you'd see this get tagged at about 0.5, 0.55. And that with a high tick extreme, it's going to pull back. So, you put call ratio, but set an alert at like 0.55, even 0.6, because it is a bear market. Maybe it won't get there. But you want to know intraday if all of a sudden there's this explosion in call buying. All right. And we looked at YM. Small caps doing great. That's a good thing. They're coming up to the 200 MA. And Bitcoin still trying to bring up the rear. It was down. Now it's up. Maybe this could fuel the last hurrah in this move. But what's going on with my screens? There we go. It's right up against that pivot. Let me move this out of the way, but you can see it's right there. This little pattern sure makes it suggest it could push up. You see that, the RBI, and now it's above here. So Bitcoin looks like it should be able to advance. It's backing off a little bit here, but it's not the greatest pattern because it's been lagging all this time, but bringing up the rear, sometimes we call catch-up trades. Your internals are right here. Breadth has been deteriorating, but market was going sideways, so not totally abnormal. But what is a concern, right, is that this is gapping up. We'll see where this is today, but if the market can hold on to its gains, we will get a sell signal today. Meaning, if there's an increase in call buying, right? Hold on. This will come up into here, and this will push up into the upper bands, and we'll get a sell signal. And so we have those two alignments, breadth and sentiment, lined up with each other, which we don't have right now. You see here where it went to an extreme. Part of our morning conversations were, these institutions are still skeptical, and that's a good thing because they're not buying a ton of call options, and now that is increased. So with the markets are where they are, they gapped up yesterday, they consolidated, they gap up today, and a lot of times, you get it the last hurrah on a Friday, and everything lined up. And one of the thoughts, a couple of weeks ago or so, when this started, was, and people are talking about it now, September, worst month of the year, but August is the one that sets the high. It just gets nasty in September. And most of the time, what I said is it happens in the middle of the month, which brings us into next week. So maybe the coast is clear, until next week. All right, let's finish up here so Dan can get going. And there you go. Options expiration next week. Oil's coming off the low. Maybe this is beaten down enough that it's worth the buy. I'll look at that. Give it a little more time, but I think so. Silver holding up here. And the dollar did pull back. Dollar did begin to pull back. A little support there yesterday. And little buyers. Here's EEM. Right, starting to perk up as it's supposed to, where the dollar starts pulling back. And you can see the euro, starting to find a little footing there. So they had that consolidation and broke out. So dollar coming in. We got some interest rates just kind of flip-flopping, but a breakdown failure. And the 3-month, broke out, and it's not collapsing. So it's just pulling back after the breakout. And this doesn't have DX, but here's the what you call it, ETF. So this is pulling, it's under the 50 now. Where is this? 82. It's down there at that bottom of that bottoming tail bar. So look, that's good for the markets. We'll see how this all comes together tomorrow and going into next week with the middle of the month thing and resistance and option trader setting up. And then we'll go from there and going into what should be some very good opportunities going into September, October. All yours, Dan.
Good morning. The bulls having a good old time. Inflationary is at, less than it used to be. And then Greg's buddy Biden comes out and says, "Oh, there's 0% inflation." And I'm like, what? Like, what planet are you on? And Rick Santoli, I like most of the CNBC guys there. Rick's like, can we all just be adults in the room? It's like he said the same thing I did, but just so much more politely than I would have. All right, so yeah, we're still bullish but extended, so it's going to be even harder than yesterday. Brothers here, we did we did an earnings 1 or 2 DTE put spread, so this one's working out also. I've been doing a ton of these with McGraw, but we gave 3 to our subscribers in the last 2 days, and so we're 3 for 3 for official trades for them. We did Cyber yesterday and Wix, and now Brothers. And we had a real interesting discussion in the green room about this yesterday. Was it Lawrence? Lawrence was telling me, look, Dan, last time they missed earnings and look what happened. And I'm not going to get into it now, but we had a long discussion about the market knew that, and the chart is here, and we're getting paid for the risk because they were scared from before. No, but you remember, Lawrence, we had a very intelligent discussion about it. And of course I could have gapped down to $28 today, and I'd be dealing with a problem on my hands. But we're odds traders, and not only the little macro common sense discussion we had, but primarily making our decisions on charts. All right, beyond here, gap reversal on earnings, bottoming pattern. I like it's gapping up here and pulling in. I love pullbacks into WRB reversal bars like this, igniting. And so that is on my list to sell 1 DTE puts. They're still very juicy for tomorrow, the 35.5s. So that's on my list. Hood. We're already in a short put, the 9.5s way down here. But now that it's gapping up, red bar ignored, Bitcoin behaving, I gave this as a core long. We bought a half lot pre-market at $11, and I'll keep an eye on it for the back half. And then we'll also short some puts. I'm gonna post the half lot. Triggered, I'll do that later. And so all our opens are fine. We're fully bullish. Let's go through these that I've highlighted already. I don't have nearly as many as before because we aren't in the middle of earnings season anymore, but let me see what I have here. All right, SNY and GSK. They're both getting whacked on some bad drug litigation news, but that got whacked yesterday, and now it's gapping down more. GSK is an ADR, but look, that's a gap from a climb up. So my bias is 30-minute high short of put spread. I don't care about the news, but I'll put it in the window and check it out. I had puts, but I can't tell where it's gapping, but as long as it opens flat or up, put spread. AOSL, gapping up here, that's a put spread. What's today, Thursday, under Tuesday's low. SPY, but that's not going to be 0 DTE. It's more of maybe a 1 DTE on a pullback or something like that. RCL, bottoming pattern. I like as a long and a put spread tomorrow with Bitcoin up. Let's see if we can get a put spread under this green bar, under 13 or lower. Beyond, I just mentioned, for bearish ones. Running out of windows here. I'm going to put all right, main gapping down under all this. So anything over yesterday's high. Disney, this fits into the category of it's a very bullish gap, but let's see, where profit taking comes in, and that could be a 1 DTE call spread. Ka gapping down after this big old run into earnings. So that anything over yesterday's high, that looks fantastic as a call spread. 6 bearish gap, shock pattern, gapping under the 20 MA. Call HBI. Gapping down, but rallying here a little bit. So neutral. Bumble. So Bumble gapping down under this. That's a call spread idea. So that's that. Let's continue with this list. I just heard some guy on CNBC talking about Restoration Warehouse because of a competitor, but nice 180 reversal on the weekly. You got a Climo reversal on the monthly. Let's keep an eye on that as a core long put spread also. Remember whiskey, Wayfair was on my core list too, same reasons, but it got whacked. Was that earnings yesterday or 2 days ago? I forget. But so, this one needs to heal more because of that red bar. Riven had earnings. No, it didn't. I always mix Riven up with Roblex. So Riven, CNBC says that's a nice weekly chart. CNBC says that has a big delivery number coming out today. And let me put some of these favorites here because I got them on my other computer. Ka and Maine. Riven, we just got to keep an eye on, maybe alarms up and down. Mara, I mentioned. Gapping down here. Sono, 19 bucks. Gap's too big. You're not going to get anything for call spread. Arc Lady. Yeah. PM tick 1450. I remember yesterday it was almost 1800, but yeah, positive tick again. Yeah, arc's breaking out. Sure. Yeah, let's come back within Thomas in the first 30 minutes. Look at all the arc ladies. DAR up alarm. Oh, I'm in this. I shorted puts in this. I didn't get you all into it. I did a little McGraw placeholder. All right, so nothing to do there. PNC up alarm. Let's move stop under this red bar.